yield fell below 4% for the first time in 5 months. This comes less than a week before the next Fed decision. Joining us now from the Zelman Housing Conference in Boston is CNBC senior real estate reporter Diana Olick. Diana, great to see you. What do you make of this drop, and what could 25 or 50 basis points in cuts next week do to the mortgage rate?
Well, Melissa, despite the two economic indicators we saw this morning, we only saw mortgage rates drop 2 basis points. So we're now at 6.27%. But inside the room across from me, you have hundreds of home builders, mortgage lenders, investors, land developers, and Ivy Zelman, one of the great analysts, putting up 87 slides literally on the state of the housing market. And what she pointed to was really that affordability as the main headwind and how that translates into mortgage rates buy downs. What she said was that 72% of the builders are now buying down mortgage rates. And she said that 1/2 of those rate buy downs are more than 100 basis points each. And that is going to continue to put pressure on builder margins. So the question is, how much longer can they do that? Because even though rates are considerably lower than they were just 6 months ago, you don't know that next week, if the Fed lowers rates, are mortgage rates going to pop back up a little again because they've already been priced in so early?
So this is important, right? So we have a 30-year fixed mortgage. As you can see it on the screen, is at 6.2%, right? And in some cases, you can get it as low as 6%. If you're going to go trying to, get your credit down, credit up to get yourself in a position to be able to go to a loan officer to purchase your own home. She also stated that builders, if you're going to a new construction builder, the communities that have builders, the builder will buy down your rate to 5% and possibly even lower to get you in a good interest rate environment when it comes to a mortgage rate, so that your mortgage is not nearly as expensive, being that the interest rates have been elevated over the last 2 years, right? So this is good, so if you're looking to buy a house, you're looking at 30-year fixed, at 6.27%. This was as of, I think, yesterday. FHA is a little bit lower. You can get it down to 6, maybe in the high 5s. And then if you want to go to a new builder, new construction, you could possibly get it down to 5%, which I think is actually really good. So all of these things then play into, buying houses and real estate. And this is also really good information for the average American, so that they can then go and put a loan, to apply for a loan to possibly buy a home.
Melissa.
So if they're buying down 100 basis points, does that mean that the mortgage that somebody's getting, if they're buying one of these new builds, is around 5%?
Yes, it is. And that's how the builders are getting their buyers in the door. And, it's a lot of talk around here also is how much the builders are prepared. If rates do come down even more, do they have the supply? Now, we look at the supply of both new and existing homes, and it's very high right now because a lot of the builders, namely D.R. Horton and Lennar, have been doing a ton of spec building. That is building without a buyer, as opposed to just buying on demand from specific buyers. Some builders think that's the right strategy. Some don't. I spoke to Ryan Marshall here. He's the CEO of Pulte. He says that is not what he thinks is the best strategy, because you could get holding the bag on a lot of these homes if people still can't afford them. So the question is, do builders keep putting holes in the ground when they don't have the buyers? Is that the right strategy? Or is it better to be a little more perhaps conservative on the construction?
So that's new home supply. And at the same time, you have really rising secondary supply out there. And, it's really a funny moment in the housing market in a sense, because you have that supply issue and then affordability is the real problem. So does that mean that price resolves this at some point?
Not yet. Ivy does predict that prices will go negative nationally very briefly next year and then rise again in 2027. Whether that happens, she said she's still not even sure about that, because, again, it's these pressures on who's in the market. If you look at supply specifically, the supply is actually on the low end. You have sales being the lowest and supply the highest, which means that the low end buyer cannot get in even to that low end home. And so that supply is really high. On the luxury side, you see more buyers, but you see far fewer homes available for sale, which again pushes those prices higher. And if you really have the higher end buyer, the only action in the market, because the lower end is still renting, then you're going to see prices continue to go up, because that's going to be how the median shows.
Diana, thank you.
That was key. I don't know if you missed that last part. It was so key to what she was saying was the issue that we have in the current mortgage and the current housing market is you have a first-time home buyer that can't afford the entry-level house. An entry-level house might be, depending on where you live, it's all based on location. Obviously, if you're in New York City or California or like Boston, the housing prices is extremely high, right? So we're not talking about those locations. We're talking about the average, right? So if we take the first time home buyer has to pay, let's say $250,000 to $300,000 for an initial home for your first house, right? Is a 2 to 3 bedroom house, maybe 1 or 2 bathrooms. Those homes are too expensive with the current mortgage rate, as well as the rate, unaffordability when it comes to the housing, price. They can't buy those houses. And then you have a large supply of those homes with not a lot of buyers. But then you have the really expensive houses, which you would call the luxury or the condo or the second home for people that want to get out of their first home and then want to elevate to their second home. You have a insanely high amount of the price level being really high. And then you have a lot of people in that looking to buy those homes, right? But you have a lower supply of those homes. So supply demand then impacts those prices. If you have a low supply and a higher priced home, let's say $500,000, $600,000, but then you have a lot of buyers in that, then that breeds competition, which means that those prices, the demand of those homes go up, which means the price of those homes go up, right? And this is an area that I'm personally in to trying to get trying to either build a home next year or try to buy an existing home that is already priced out at $500,000, $600,000. So that's the tough aspect currently in the housing market. And the lady said that we could see a small pullback in prices for houses next year, which again could be 2 to 3%, which is not going to impact the market, I'm sorry, not the stock market, but the housing market that much. It's just going to ease a little bit when it comes to asset appreciation next year. And that's not going to make a huge difference when it comes to the housing market, right? It's not a crash. It's just a cooling down phase. But then in 2027, when you start to see mortgage rates continue to come down through 26, you're going to have a whole lot of new buyers, which means that prices then are going to get elevated again.